last week had plenty to offer investors. We saw major tariff announcements. We saw 4 of the 7 Magnificent 7 companies report earnings last week. But this week, I want to talk to you about the FOMC meeting that occurred last week, as well as the jobs report that we got on Friday. So first, the Fed meeting last week. This is the Federal Open Market Committee. This is the FOMC meeting. The group meets 8 times a year. And this was notable for a couple of reasons. There was no rate decision, so the Fed did not cut rates. That was pretty widely expected. But what was interesting about this one is that it was the first time in 32 years, or about 259 meetings, where we actually saw 2 federal Federal Reserve governors actually dissent. So they voted in favor of cuts. The remaining 10 voting members of the FOMC voted to leave rates unchanged for this meeting. So that was really interesting. We also saw in the press conference that followed, Fed Chair Jerome Powell talked about how there was still a lot that needed to be determined in terms of the inflation and where that is heading. He did note some slowing job demand, but it appeared that the labor market remained healthy. Now, you wonder if the Fed could have, if they could take it all back, if they would have, because just 2 days later, we got the jobs report for the month of July, and that painted a very different picture than the one we've been looking at over the last several months. Specifically, we saw 73,000 jobs added to the economy in the month of July. That was well below consensus estimates, which were higher by about 30,000 or so. But even beyond this headline figure, we saw there were net revisions to the downside of about 260,000 jobs. And so what that tells us is that the perceived strength of the labor market in the last couple of months, it was actually really just a mirage. Things were not as strong as they appeared to be. And so now it is leading us to question the resilience of this economy and where things are actually heading. Because of this, we saw the market sell off quite a bit on Friday in response to this news. Today, we're recording this on a Monday morning. We're seeing the market rebound because what this is all doing is it's leading to greater odds that the Fed will cut when it meets next time, which is in mid-September. Actually, the market is pricing in odds of a 90% odds of a cut in September. Now, I will note that before the Fed meets again, we will receive another jobs report. We will receive 2 more inflation reports. But for now, the latest data suggests that the Fed is probably ready to cut rates. I will just highlight the fact that on a 3-month basis, the economy has added about 35,000 jobs. That is very, very low. That is after accounting for these downward revisions of 260,000. So 35,000 jobs being added on a monthly basis is extremely low. When the Fed decided to cut rates by 50 basis points this time last year, the monthly average at that time was about 82,000, and things are much, much slower right now. And so if this is the beginning of a trend, then the Fed certainly wants to get ahead of it and not stay in this high rate environment any longer than it needs to. Now, obviously, they are still balancing the other part of their dual mandate, which is ensuring price stability, and inflation is still showing some signs of upward pressure. So I do not envy the Fed's job right now and the position that they are in. They are obviously getting a lot of pressure from President Trump and those within the administration. So this is not going to be an easy decision for them regardless. But for us as investors, we are watching because this is certainly, it helps to provide a little bit more clarity to the economic picture and suggest that maybe things aren't as strong as they appeared to be. It's one of those reasons that we maintain a quality bias within our portfolios, and we are neutral when it comes to our overall stock and equity positioning across our portfolios. We're going to get plenty of data around the economy, around earnings over the next week or so. So I'm going to leave it there for now. If you have any questions, please don't hesitate to reach out to your advisor, and I'll look forward to seeing you next week.